Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 12th of April. So I've seen some very big moves this week. The CPI data really rocked the markets in the indices and the currency. So we'll jump straight into the charts, see if we can identify any trades for today or early into next week. So I'll start out here with the Aussie USD, and you can see that we've had a very big reaction off this top level here around that sort of 65, 50, almost 50 zone. It did reach that peak up there. We hit the resistance, there's no worries about that, and it stayed right within this zone. So realistically, it was a big move down all the way to 64.90 to 65 here again. You can see the support, and it finds itself at a very, very strong level. This has probably been the strongest level of the year from a support standpoint, and really that 66-cent mark has been obviously very, very heavy resistance. So the majority of the trading that we've seen in 2024 has been between this actually 100-point range, which is actually quite unusual for such a long period of time to be within a pretty restricted zone. But it's been very, very easy to trade, right? Like we've seen the resistance right through here. We can see that that it reversed quite quickly and went all the way down to the support zone. So if you're playing that support and resistance up and down, you've done very, very well on the Aussie. It felt the pressure here. You can see that it was obviously very heavy resistance, and the minute it did turn around, the smaller time frames gave you the clue to get in. It looks like one big giant red candle. That was after the data release, of course, but in reality, if you go to the smaller time frames, you know we've got the lower high, lower low sequence that we talk about week in, week out. So hopefully you're able to get a bit of that. We've had a little bit of a reaction off that 65-cent mark today in the last session. And realistically, all we're looking for now is a series of higher highs and higher lows on the smaller time frame, say 1 hour. We can actually go to the 1 hour and have a look at that. And we may already start. It's already started the process. You can see it hit the level of support. It's already trying to higher low. So if we get a close above that 65.50 mark, we're going to be back in the center of the channel, and it gives us an opportunity to look for trades back up to the top end again. But of course, if it reverses here, we know with a pretty decent idea of where it's going to go, and more than likely it's going to be the 65-cent mark. So until one of those levels break, we're not going to be doing anything more than just scalping between the 65-cent and the 66-cent mark on the Aussie. So pretty good trading there. All right, we'll move over to the US dollar CAD, and this one's broken out of its zone. Yeah, helped by the news, but it certainly did its job. It broke through the resistance there, bounced off the 20 moving average. This is the perfect trade. Once it did test the resistance up above, came down, tested the 20 moving average, and then off it went straight into the 137, which is the resistance that we've had set for it for quite some time now. Look, it's found a little bit of resistance there again. No real surprise. Like we know that it has been a problem for it in the past, as you can see. And it's also a whole number, which we know does cause a little bit of grief for a lot of these currencies. But really, same deal goes that we're looking for probably a reversal to the top end now to around that 136. If we see a series of lower highs and lower lows in the smaller time frame, we can trade down to the 136, and that will be the next support base. And that level would provide, I would expect, a pretty reasonable amount of support. And if we get there, it gives us a pretty comfortable trade, I think, once we see a series of reversals of higher highs and higher lows on a smaller time frame from that level. The 137 now, it has been reached in recent time, would be a pretty reasonable zone to aim for. So I'd be looking for shorting opportunities. If it does break the 137, however, I would be probably waiting for it to come back and retest it. I don't know if I'd be jumping in on the first go. I'd wait for it to come back and retest it from above, just similar to what we're doing with the 136. And that would provide a better support zone for it. But good trading on the CAD. I know a lot of people got this because they were waiting for that break, so that was really good. The US dollar yen was another star of the show. It finally broke through. We were talking about how flat it was here, but we knew that, yeah, when it's doing all of this tightening of movement, it's really opening itself up for a big move up, and it did that. It effectively hit the target we were talking, even though we didn't draw it. The 153 is what we were going for. It's already hit that target now. And a lot of it's going to be dependent on, obviously, what happens with the US dollar, but this has been its own beast anyway, really. And now that it has broken through, it's already hit the target that we were aiming for, that we were talking about. So hopefully you're able to get that. I think now I would probably wait for it to settle down, see what it does from here. It could certainly keep going, but really, because the target has been hit, I would wait for it to either push up and come back and retest a bit of a zone and get some consolidation around that 153, or pull back to a reasonable level at around that 152, which is the top end of where this resistance was, and let the 20 moving average catch up. And if it does that and it pulls back all the way to the 152, that would be a really, really good setup, especially once we get that sequence of higher highs and higher lows. We would be looking for a really good setup off that to bounce up. And now we know we've got a predetermined level to aim for, which is around that 153. And could provide some really good trading. Nothing short of a break of the 20 moving average and a 151 sell would make me want to actually trade this down at the moment. I would believe in that. I wouldn't even be looking for the counter trend because I think this is probably fairly strong from a basically momentum standpoint. So I wouldn't even be looking for the counter trend on that one. I'd be keeping that fairly tight. Over to the dollar index. And this, again, the perfect trade. A big rejection here. Obviously, the 20 moving average caught it at the 104.20 area, which we know is extraordinarily strong, has been for a long time. Once we got that pin candle, the shooting, not a shooting star, it's a hammer, right there on the 20 moving average, that was our signal that it was trying very hard to hold above the 20 moving average. And of course, once the news came out, made everything okay, and off it went straight to the 105, which of course spelled doom for the euro, which is the one you would have traded. You know that obviously the 105, 105.20 is a pretty strong zone for it, so really any target has been hit, and it went off the right place. But the euro is the one we're talking about, of course, because this is the one that you would more than likely trade. 20 and the 50 moving averages were holding it at a very strong level of resistance at that 108.50. We knew that any dollar movement up was going to be a short on the euro, and it finally got to the 107, which is really what we wanted. We had that targeted for the last couple of weeks. Didn't quite get there last time. As you can see, it bounced back up again and gave us an opportunity to get in again at the 108.50. But this time it got there and it pushed down there very solid. When a very solid level like the 107, like a round number, is in its sights, it will gravitate to it like a magnet most of the time, especially if it gets a bit of a push. Now, yes, of course, this was news related, but there's news every week, as we know, and news generally pushes the markets into the direction of, where the support and the resistance is. So hopefully you're able to get that, because I think it was a really good trade down to the 107. I know a few of you did, so that's fantastic. But yeah, really good trading here. I would look now for potential support. Let's see if it finds support here at the 107. All we're looking for is a sequence of higher highs and higher lows. Like, again, you'd go to the smaller time frame, and if you see a sequence of higher highs and higher lows from this base, then we're starting to look back up to around that 108 in the first instance to take a scalp. And if it breaks through there, the 108.50 would be the target, because that's where the resistance would more than likely be. But if we don't get a sequence of higher highs and higher lows, and we actually break down below the 107, which is obviously going to include a lot stronger US dollar index, then what we would be doing is actually starting to target the 105. It's a big drop from here. I don't even know if the 106 will hold it. I think the next real target's 105.20. So that's what we would be aiming for. So daily close below that 107, and we'd start to target the shorts. But in that time, I would expect it will come back and test the 107 from below, which would make it a better trade again. But good trading on the euro. And the S&P 500, look, this has been a very interesting week for it. It broke down the 20 moving average well and truly, but didn't quite go past the previous low. So you can see here last week, we did break the 20 moving average, but it got itself straight back up there again. The news sent it right back down again, and you can see that it actually stopped. Even though it went a little bit lower, it actually closed higher than the previous low, which again is a sign of strength. Look, it's been a very strong level. This basically 51.50 is the level we're talking about here. It failed to actually break through. And in order to solidify this sell-off, it's going to have to break that level, obviously. But it's being very resilient. And you can see in this session here that it's been a pretty strong day, and it's trying to close above the 20 moving average. It hasn't done so. Now the session is over, so the next session is going to be key. If we're trading on Monday underneath the 20 moving average, I'd be looking for weakness. So I'd be looking for moves down to at the very least one of the 51.50, which is the previous low. But if the daily close below the 51.50, then we'd be starting to target shorter moves all the way down to the 50, and 5,000. So the weakness is looking like it's starting to kick in, but it's doing its very best to try and hold there. Okay, so if it's trading above the 20 moving average on Monday, then I think we'd start to look for a sequence of higher highs and higher lows, and look for a move back up to the previous peaks. But that's all I'd be doing on this one. I'd be scalping until we either get a break below 51.50 or a close below or a close above the 52.70 area. But even then, I'd be waiting for a move down from that to test it from the top before we'd be taking any trades. But scalp inside those zones would be the way I would play this one until we get a daily close around either the 52.70 or the 51.50. Both of them will spell a pretty good move. So I hope everyone's had a great week's trading. We've had some really, really good trades and all of our levels have been hit again. So hopefully you're able to take control of that. Have a great weekend and I look forward to seeing you all next week.